Hi everyone and welcome to the very first video in the beginner's guide to the Forex market presented to you by the Avri trading group. My name is Penarai and I'm extremely happy that you've stumbled upon our video. Now, we'll be releasing more beginner guides in the future and as well as trade analysis and chart analysis in the future. So don't forget to subscribe and hit the like button as it helps the algorithm a lot. And without further ado, let's get right into it. So this is just going to be the contents for today. First of all, we have our introduction, a disclaimer, understanding technical analysis, the anatomy of a candlestick, time frames, tips, and as well as a conclusion at the very end. So jumping into the introduction of who we are, we're a group of traders based in Asia that trade the market the way we know how to, using logic, reasoning, and high probabilistic ideologies. We do not claim that our idea is 100%, but we do know that we would choose a higher probabilistic trade. We pride ourselves in teaching in the best way possible and giving our students and future students the best support that we can give. And our motto at Avri Trading is simple trick, don't quit. As long as you don't quit, as long as you're always fighting for it, you will get to where you want to be. And on the lower left hand corner of this video, you can see our socials. You have avritrading.com, which is our official site. You have our Instagram at Avri Trading, as well as a Telegram group that you can access by going down into the description. So don't worry about it. All three links are gonna be linked in the description so that you can visit us. And our disclaimer. This video and any other forms of communication and writing that we at Avri Group releases does not constitute financial advice. We are not financial advisors and hold no formal qualifications in this area, as we are merely traders and speculators. Trade at your own risk and capabilities. Now, without further ado, let's just jump into the very first chapter, which is market structure. And understanding market structure is fairly important, and what a way to kick it off with understanding what technical analysis is. The very first point, it states there that it is to make probabilistic forecasts of future price behavior based on price history. This is to say that with price history and with the knowledge that you have, you'll be able to make probabilistic forecasts of where price might go. Alright, and I've already underlined probabilistic forecast because it is very important for you to know that your chances of analyzing a chart correctly depends on a few things. It depends on the confluences, the knowledge, and the understanding that you have. Alright? Secondly, it is to find risk-defined entries and exits on instruments that a speculator wants to be long or short. Now, this is to say that with technical analysis, with the knowledge and understanding that you have, you'll be able to find entries and exits on the currency pairs that you intend to trade. And I also added risk-defined because in trading, in Forex itself, you are given the chance and the choice to define how much you intend to risk. Alright, and we will definitely release a risk management video in the future, so do keep for that video. Alright, and last but not least, this is a pretty harsh reality, and that is that this is not a method that guarantees 100% success rate. Alright, it is very important to know that you will lose on some days and you will win on some days. It just depends on what you know and how you apply the knowledge that you know. Okay? Next, candlestick anatomy. Alright, candlestick charts is a way to show price movement in a chart. Alright, so if you go to TradingView or MT4 or CTrader or whatever trading platform that you're familiar with, alright, you know that there are options in terms of how you want to show price move. Okay, and candlesticks is just one of them, and they are also one of the most popular ways of showing how price moves. Okay, so similar to line charts, bar charts, Heikinashis, and whatever it is that there are out there, it is just a way to show price movement. Okay, next, the anatomy of the candlestick itself. It has its color, its body, and its wick. Okay, and we're just going to go through them one by one before we go to a chart, a template, so that I can show you with better understanding what it is. Okay, so first of all, we have the candle colors. Alright, and the candle colors Normally for a bearish candle, which means a candle that shows price going down, it's red. And for the opposite, with a candle or a bullish candle that is going up, it is normally green, right? So a red bearish candle just means that the closing price was lower than the opening price itself, all right? And a green or bullish candle just means that the closing price was higher than the opening price, all right? Next is the body itself. A red bearish candle, the upper body is the opening price and the lower body is the closing price, all right? And the green or bullish candle just means that the upper body is the closing price and the lower body is the opening price, okay? And finally, it's the wicks, all right? The top wick is the highest price during that specific time frame, and the bottom wick is the lowest price during that specific time frame, all right? So don't worry if you're confused. We're gonna go through them after this slide. All right, so there you go. We have a fairly simple understanding of the bearish and bullish candles. You have your bullish candle on your left and you have your bearish candle on your right. Okay, so as you can see, we have the highs of the candles up here, we have the close, we have the open, we have the low, and similarly on both sides as well. So let's go through them one by one and just understand what it means. All right, so first of all, we know for a bullish candle, okay, if we look at the previous slide, for a bullish candle, the closing price is higher than the opening price, and the upper body is the closing price and the lower body is the opening price. All right, so this just means, all right, that during a specific time frame, okay, price opens at this area here and closes at this area here. All right, and the price at the close for a bullish candle is higher than the price when the candle opens. All right, so let's just say that the open is, for a simple number, let's just say it's a 1.5. all right, and the close is let's say it's a 1.9. all right, so this means that price opened at 1.5 and it closed at 1.9. okay, now during that movement of price, okay, as you can see, there is the wicks, all right, and there's the high and there's the low of that particular area. Okay, now this just means that during the time, okay, of the candlestick itself, price went up to this area, price went down to this area. So let's just say that this is 1.5 again. We have 1.9 at the close, we have, let's say, 2.2 at the high, and we have 1.3 at the low. This just means, okay, that price opened at 1.5, okay, and it moved between 2.2 and 1.3 just to close, okay, at 1.9, which is over here. All right, so that is just why candles have the wicks. Okay, this just means that during this time period, price went up to the high, and during that time period as well, price went to the low. Okay, similarly on the bearish candle, all right, you also have your high as well as your low, but the only difference is the opening and the closing and the structure of the candle itself. Okay, so as you can see, or rather remember from the previous slide, the red or bearish candle closing price is lower than the opening price, and the upper body is the opening price and the lower body is the closing price. All right, so this just means that price opened at the top, okay, and since it's bearish, which means it's going down, it's logical to say that price came down to the close and closed it there during that specific time period. Okay, and similarly it has its high and its low. Okay, so we're going to be covering what these are on an actual chart, so don't worry about it. Okay, so let's just go onto an actual chart, and there you go. All right, so as you can see here, okay, for the green candles, all right, for green candles, remember, green candles, they will specify that it is a bullish movement or that price is going up. Okay, and for the bearish movement, all right, which is the red color candles, price is coming down. So during this area here, all right, price came down. Okay, simple enough, right? So let's just go and get some examples so that you guys can understand what it is about. Okay, so let's just talk about this one candle right here. Okay, it has the top wick and the bottom wick. Okay, and it also has the opening price because it's a bullish candle, and a closing price. So this is the close, and this is the open, and where this is, that is the high, and where this is the low. Alright, so let's just take a look at how price move in this particular area here. So let's just get out of this. Alright, and let's just go and get this right here. Okay, and yeah, so let's just put it at the open, which is where the bottom part of the body is, right there. Okay, and let's just take one at the close right there as well. Okay, so we know that this is the close. Alright, let me just change the color for you guys. There you go, that is the close, and this is the open. Alright, because this is a bullish candle. Okay, so there you go. So basically during this time, alright, as you can see where price is right here, so if I were to take the crosshair and put it right at the bottom of the candle, alright, you can see towards your right side of the screen, it says that the price at the open for this candle is 1.17589. Okay, so price open at 1.17589 and it closed at 1.17789. Okay, so it fits whatever it is that I've just mentioned in the presentation itself. Okay, now let's look at the wicks of the candle itself. Okay, so this is the low wick, remember? So this is the low and it's the high, and during this area right here, price came down maximally to a point of 1.17562, and over here it is 1.17810. Alright, so wicks are just basically the shadows that a candle has placed. Okay, so just imagine that price opened here and then it went up, let's say to this area, and then it went down to this area before closing at the close right there. Okay, so this is basically the movement of the candle. Alright, similarly, when we are looking at a bearish candle, so let's just say we're looking at this bearish candle right here, we know that the top part of the candle is considered the open, right? And we know that the bottom part of the candle, which is right there, signifies the close. Alright, so let's just put it right there so that you guys can see it easily. Alright, so this is considered the close. Okay, so just an example, when we take out the crosshair again, you can see that at the open, alright, price open at 1.17590 and price closed, okay, for this bearish red candle at 1.17492. And like I've mentioned in the presentation itself, we know that the opening price, alright, for a bearish candle like this one, alright, is higher than the close. Alright, because why? Price is coming down. So let's just say it's a 2.0 and price came down to a 1.5. Similarly, alright, so that is basically the open and closing of a bearish and bullish candle in the market. Alright, so this just goes for every single one of these candles. Alright, so let's just go back to the presentation itself. Let's just present, and there you go. Alright, so that is a very, very easy understanding of the open, the close, the high and the lows of the bullish and bearish candles. Okay, now let's just go into the next topic, or rather the next part, which is the Candlestick OHLC. Alright, so when you are hovering your cursor over a candlestick, your platform should show you the OHLC. So what does OHLC mean? It basically means whatever it is that we just covered: the open, the high, the low, and the close. Alright, And these terms are significantly useful, okay, to find price levels of, let's say, a weekly open, a daily open, the high and the low of the day, and basically the precise levels and data that you need in order for you to execute a trade or for you to analyze a trade better. Alright, so let's just go into the chart again, and let's just look at the OHLC of that particular price itself. Okay, so as you can see on the top left hand corner right here, you can see that there are numbers moving. Okay, and next to those numbers there are alphabets. Alright, and those alphabets are the O, H, L, and C. Alright, which means it's the open, the high, the low, and the close. Alright, so let's just go into a fairly simple time frame. Sorry, candlestick. Alright, so let's just look at this one right here. Alright, this one right there. This one. Okay. So let's take the cursor or the cross and we just put it on this. Alright. So when we put our cursor on this candlestick, we can see that this candlestick opened at 1.17407. Alright. And the high of this candlestick is 1.17508, the low is 1.17380, and the close is at 1.17493. Alright. So let's just take a look. We can see the top here. This is the high. Alright, so it's right there. So when I put the high, when I put my cursor on the high of the candle, you can see that it matches the data that we see, right? So the top left hand corner says that the high is 1.17508. Similarly, on the right hand side of the screen, you can see that the price matches 1.17508, and it's similar to the close, the open, and the low as well. Alright, so why is it important? It's fairly important because when you are trying to understand price movements, alright, or when you are trying to understand let's say support resistance or supply and demand, it's important for you to understand and note where those levels are, those key levels basically. Alright, and let's say you are looking at a key level of this area right here, so you just put a line, alright, and you understand to yourself that, okay, so at this point the high was about 1.17708. Alright, and if it breaks here, what do I do? If it doesn't, what do I do? So on and so forth. And it depends on your knowledge and your understanding of the market. Okay, which, don't worry, towards the end of the video we will show you something really special. Okay, so that's about it for the OHLC. So let's go back to the presentation again. Alright, so time frames, alright, and time frames are really important in terms of trading. Alright, and you need to understand what time frames are, how they are used, and which one is more optimal for trading itself. Alright, so the time frame you choose dictates the period that candle represents. Alright, and that basically means that if we are on the 1 hour candle, the 1 hour time frame, one candle signifies an hour of movement. Alright, so for example, when we were looking at, let's say, this candle right here again, right, this candle here, and the open and the close. Alright, so this just means that for this candle, it took this candle an hour for it to open at 1.17407 and then close at 1.17493. Alright, so this is just basically what it means. It means that now I'm on the 1 hour time frame. Alright, so this candle means 1 hour, this candle means 1 hour, this candle means an hour, this candle means an hour. Alright, so when you're looking at a price movement, let's say from this point to this point, alright, from here to here, we can see that it took 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours to move from point A to point B. Okay, similarly, when you go onto a lower time frame, let's say a 15-minute time frame, alright, this just means that for price, okay, so let's say for this one, for price to go from this open to this close, it took 15 minutes. Because why? This is one candle on the 15-minute time frame. Alright, similarly, for price to go from, let's say, from this to this, it took 15 minutes. From this to this, another 15 minutes, so on and so forth. Okay, So so that is just basically what it means. All right, when you're choosing a time frame, that time frame basically specifies how long a candle will take to open and close. Okay, so 1 hour time frame just means that one candle, red or green, represents an hour of movement. Alright, and similarly, the OHLC shows the open, high, low, close of that candle for that specific time period. Okay, now we know that price itself is fractal. Whatever happens on a lower time frame happens on a higher time frame, so on and so forth. Alright, so higher time frame candles consist of smaller time frame candles. Alright, an hour candle consists of 4 15-minute candles, and a daily candle consists of 24 1-hour candles. Alright, so let's just go to the chart again and see how we can further explain this. Alright, so let's just say we go onto the 1 hour candle and we mark our level. Alright, so let's just say we mark this particular candle here. Alright, so we mark this spot. Alright, and to this spot right here. Okay, the open to the close. And then we go to the 15-minute time frame and see the movement itself. Alright, so as you can see here, alright, we know that an hour candle equals 4 15-minute candle. Alright, so as you can see, there is 1 right here, 2 right here, 3 right here, and 4 right here. So remember, on the 1 hour time frame, this itself was a 1 hour candle. Okay, but now that we've already moved on to the 15-minute time frame, we know that 15 times 4 equals 60. Alright, and 60 minutes equals to an hour. So here we have 4 15-minute candles. Alright, fairly simple to understand. So the candlestick closures matter a lot. Alright, so this can signify a break in market structure, this can signify a trend reversal, and it's always important to wait till the candlestick closes for the time frame you're using before entering into a trade or making a probabilistic forecast. Alright, so why did I put this in time frames? It's very, very simple. Like I've mentioned, price itself is fractal, which means whatever happens on a lower time frame happens on a higher time frame, vice versa. Okay, so if we are looking at, let's say, a market structure break on a 5-minute time frame, alright, one might think that, oh, it's gonna go to the upside. Alright, so for example, let's say we see a market structure break on the 5-minute. Alright, so we see this, alright, and then this is the key level that I talked about, and let's say we see a break in market structure towards the upside. Alright, so in our minds we might think that it's actually just gonna continue going up, but we don't know, or rather we do not realize that on a higher time frame it is just something small, something insignificant. Alright, so it's really, really important for you to go through all the different time frames in order for you to know where a potential reversal, correction, market structure break, whatever it is that might occur. Okay, so let's just go on to the next slide, which is the important tips. Okay, first tip, use a higher time frame. Okay, definitive volume and structure is stronger on the higher time frames itself. Alright, market structure movements is more evident on the higher time frames because there's lesser noise when evaluating a potential trade in the first steps. Alright, so what does this mean? This basically means that the movement on the higher time frames is basically more concrete. It's easier for you to see. Alright, so for example, let's just go onto the, let me just delete that. Let's just go on to the higher time frames. Alright, so as we can see here, we can see a downtrend. Alright, so we are going down, alright, like that. So we might be looking, okay, it is highly probable for you to look for a sell when it's a downtrend. Alright, which we will cover in a future video. Alright, so let's just say we're gonna go for a sell here because we know that it is on a downtrend on a higher time frame. Alright, the movement is more concrete, it is more evident. Now let's say you tunnel vision, which is the point right here. Alright, and you tunnel vision a lot, and you only look, let's say, on the 5-minute time frame, okay? And let's say you see it right here and you're like, damn, okay, maybe I should just go for a buy to this particular point here, and it's just gonna break and it's just gonna go all the way up, so on and so forth. But you fail to realize that on the higher time frame, it is actually on a downtrend. Alright, like that. It is actually on a downtrend. So you really need to be able to understand the higher time frame movements and make sure that you're following the bias of that particular time frame itself. Okay? And the next tip here is look from above. Avoid tunnel vision and look from a bigger point of view. Zoom out. Okay? As this will allow you to add more confluences to a trade, especially potential corrections in price movements. Alright? And as well as this is a better way for you to understand the overall price movements. Okay? So what does this mean? This basically just means that most people, they will only just be looking over here, right? They'll be like, okay, cool, so like I'm just looking over here, I'm gonna go do this and that and whatnot, but they fail to look at the bigger picture. They fail to look at what's happening. How has price been from this point to this point? How has price been in the past few days maybe? So don't tunnel vision. Don't put yourself in a spot whereby you're only focused on a specific point in price, like right here. Look bigger, zoom out. Look at how price is moving and what it has been doing, key levels that might be of importance for you, so on and so forth. Alright, so that's a very, very strong tip that I would highly recommend you guys to keep and continue moving forward. And there you go. This is the conclusion. You made it till the end. Well done. And I thank you so much if you're all the way to the end right here, because I cannot be grateful enough for all of you for even watching through this very, very first video. So let's go through the conclusion before we end it off with one last slide. Alright, so the very first conclusion is understanding time frames and structure during the time frame itself is very, very important. Alright, price is fractal. So what's happening on the lower time frame would potentially make something happen on a higher time frame and vice versa. Alright, learning how to read and understand the chart without needing to think so much is evidently really important, and it takes time. Alright, please don't think that you're gonna be a master at trading or a master at reading the chart in a day, in a week, let alone a month. Alright, you need time to get there, and it's okay. Alright, because we are here and we are here to help you guys as well. Next, create a habit where you look at the different points of the candle during the specific time frame itself to understand and note down the important key areas. Alright, so like I've said just now, combined with the tunnel vision idea and all that, it is very important for you to mark down areas of a chart where you deem important. Alright, be it if you trade supply and demand, be it whether you trade support and resistance, whatever it is that has to do with technical analysis itself, it is very, very important for you to note down the important key areas of that specific time frame. Alright, and how we trade at Avri is that we will go on to different time frames and mark the key levels and key areas and basically follow through our rules of our own trading style, basically. Alright, and last but not least, do not put yourself in a tunnel vision and focus too much on the lower time frames. Look at the bigger picture, zoom out, and see the major structures of price. Remember, price is more evident, or rather the movement of price is more evident and more concrete on the higher time frames. Alright, so before you go, we have one last final thing. Now, at the beginning of the video, I did mention that those of you who are interested in becoming profitable traders and taking their trading to the next level to stick to the end of the video, because here we have the rundown of the Avri trading community. Alright, it is an affordable $79 every single month, and you get all of these that you see on your screen. Alright, so first of all, you get the education, alright, be it whether you're a complete beginner, whether you're intermediate, or whether or not you just want to have a community of like-minded traders. This is a spot where you want to be. Alright, next you get a refinery point. Alright, this is where you can refine your thought processes and understandings with the coaches. Alright, so we have 2 full-time coaches and 1 founder that also is available every single day. Next, you have market reviews. Alright, so we will be sending weekly market outlooks every Sunday so that you can see what we see and sharpen your edge. Alright, next you have your trade breakdowns, which is basically the detailed trade breakdowns for the trades that we take and send to our exclusive group. Alright, and yes, we do provide Forex signals, but like I've mentioned, we are not financial advisors, so we cannot stress this enough. We are not responsible for your wins and losses. Alright, trade at your own discretion and capabilities. Take it as trade ideas and see what we see, learn how we trade, and earn with us as well. Next, you will have assistance from the Avri community members as well as the coaches. Alright, and this is where you can clarify your doubts and thoughts that you might have. And last but not least, a very, very important aspect of being a trader is psychology. Alright, traders need control of their technicals as well as their own mind. Thus, we provide psychological support to our members who are in need. Alright, so let's say you have a bad day, let's say work wasn't that good, let's say you just need somebody to talk to. Feel free to contact any of the Avri community members and the coaches, and we'll be here to help you out. And if you have found this video helpful, do not forget to hit the subscribe button, the like button, and if you do not wish to miss another video of ours, turn on the notification bell so that you will not miss another video. And if you're interested in joining the community, head down to the description box below and head to our website, scroll all the way down, and you'll see the very first video of our mentorship as well as a monthly checkout so that you'll be able to join us at the Avri community Discord. Thank you so much for being so amazing, and I'm happy that you're here as well. So that's about it from us. To the next video, take care of yourself, and we'll see you in the Avri community Discord. Take care.